Welcome to TradeTheMBI.com. This is John. This report is for the 31st. Well, yesterday we saw a continuation of that brief amount of selling, and we talked about a return back to the ABM yellow. Once we broke below that, that caused a little bit more selling. All we did was come back down here to the magenta level, which was right around the 28.18 range. Not too dramatic, and then bounced back up a little bit from there and then came up. But what we noticed was the dropping of the shakeout. We had already seen the orange here on our DOC popping above the plus 13.5, which is always a warning sign, particularly when we have the cross of the green below red, which is midterm buyers below the longer term. And that is why I was pointing out that we should expect to see a continuation of the decline. And sure enough, it started. And once it began, actually, even on the daily, we already saw the cyan right here moving above the green, which is the shorts really pressing into that beginning of decline. And that really exacerbated things because we're so far down here. Short-term buyers, while they're reset, they've really we're way underneath the negative 13 here, and it really won't be too much of a positive until it gets back above that. So it's still in a very weak configuration. The critical part is going to be watching our shakeout here, this yellow line, when it dips below that plus 15 is certainly going to create what I would call a full reset of the shakeout here, and then watching that histogram and seeing if we get back down to a zero. Like we reset back over here, we were fine moving along, then we paused, just like we're seeing right about now, and that reset. So the question is really going to be, as we're starting even to this day, we've got a nice little bounce back, because when you get these exacerbated down moves, you get a little bit of a move back up in the pre-market here right now. And it'll be interesting because it's going to create what we would call a DOC spread, where the cyan moves above the red, and that's typically a short indication. The only bonus is that you have a complete reset of buyers, and that's going to begin for the new part of the month. We expected this with this much of a move coming up, that you would have profit takers going into the end of the month, and that was a normal. It was expected after we had the big blow-off move at the upper end, and so that's why I was saying not to be afraid to short signals. In fact, I even posted about that, and I'll show it on the 5K tick chart that we use for intraday action. So the NQ, likewise performance, but again, closed above the ABM yellow, which is a critical pivot point, because anytime I say, below, you can be short, but back above it, you move back to the long side of it. And a little bit cleaner chart here for the NASDAQ. It looks pretty clean, but you don't quite have the same cyan cross of the red yet. You can look at the numbers right there, so it hasn't quite achieved it. So I think we're going to probably have a little bit more back and forth weakness. So Euro turnaround, very helpful for the market. That should buoy things, but this is the European session, so typically in the European session you get a little bit of bounce for the euro, and then as the US session starts, it comes back a little bit. But needless to say, there's been no real serious shorting of the euro at this particular point, so even any little fade was likely to turn around as that was coming through. What people are starting to recognize, is something we've been pointing out, is that Treasury rates rising, and that's going to put more pressure on the market, because the higher the yield, people have an alternative. We haven't had an alternative to being in stocks for the longest time, and it's only been this pullback of Fed involvement that is finally letting a little bit more market forces move things, and you're probably likely to see rates continue to rise. We talked about the other day the Treasury wanting to issue some of the largest amount of debt in a long time, and some of that I think is a precursor, like I was saying, about budget talks and kind of a preemptive setup there. So we got the fill back in of positive extremes on gold, almost complete. We've come to the second one right here. This would be the primary, still above the ABM green, but again, here's that breakdown, and again, it's still above the plus 15. So, and you've got a complete reset of everything, and not quite enough shorting to really drive it. So I think it's just a momentary pause for oil there. And gold likewise situation, just barely enough activity. It's just a little bit of profit taking after this massive move, and eases off a lot of these positive extremes, which pretty much from an algo standpoint is that things got out of control, they come back in. I thought I'd point this one out because I wanted to highlight this. Is something I've been talking about for the last few weeks. After these short signals, that a lot of times you'll get dips in that and in this particular case, our 50% Fibonacci here, and this is Bitcoin futures. It's been very reliable short setup with the plus 13.5. In this case, you had reset here of the steel, and so we moved across. The expectation, though, is that the rising lows would lead to the retrace to the 50% and then eventually to the lows, and that's exactly what happened. And the key with knowing how that's going to go is that even though you see these resets where we have the orange dipping below the red, you know that those pops aren't going to be sustainable when you don't have that reset of short-term buyers. And in fact, clearly it's sustained itself every single time you had little short up pops. They were represented by the fact that you had no steel recovery, and look at what it led to. Now, people are going to talk about, well, this and that exchange, blah, 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 but, closed off, and that's why, there was weakness. But the reality is you could see the weakness was built into it, irrespective of, what the claims are, because this represents several days. And, the most breaking news that caused, the decline wasn't really the case. It was already built into the, earlier part. There was no reset. There were no new buyers to take up the slack, and that's exactly why we came down to the lows. And this was something that I had talked about on the 5K chart. We had seen an early dip, and we were following it as it was making lower highs, but we were also making lower lows, which means you weren't going to get that pullback up to the high levels. And we came back to this rally that started here, and I was going to say it's not likely to sustain itself, that we would return back to the lows. And that's exactly what happened, because again, this is that long run of the steel not having reset. So we ended up with a much more narrow range that pretty much right now we're just getting back to the peak of the low session once we got into the consolidation. So we would still look for that. We're getting what I would call the muck zone here. This is a prime example of where you don't have significant dips into the oversold. Fine, we get the red and the green, and that causes a little bit of a pop, but you didn't get a significant reset of the steel. So you know that those pops are likely going to test your 50% range and then fade off unless you get some kind of reset that's getting into the oversold. It's when you get down into these oversold character areas here below the minus 13.5 is usually when you get your significant pushes. Now, these aren't bad moves. I mean, you can see what the numbers are coming from them, down in the 25 range, and then the high going all the way up to 31. So it's 5 or 6 points. It's still a significant enough move, but you understand that it's going to be short-lived and that you have to trail it much tighter than you would something that's a broader move. Overall. So good indication. I will be sending out indicators for February a little bit later so that everyone will be set for the remainder of the week, and all looks good. I've been testing some of the changes that I've made. I'm hoping to get those out shortly. I just need to make sure that we have verified all the different setups before I put out that alteration. It's been something I've been working on for the last month and a half, but not always easy to get that everything to work the way it's supposed to, but we generally understand when we look at these things, the overall setups, and how looking for oversold and overbought conditions in very specific forms are really the best overall trades, as opposed to when we get into these flat areas, and this what I call them the no spark zone, which is between the negative 13.5 and this negative 7.5. It just doesn't tend to produce long sustained runs. Yes, we had this little pop here, but it did retrace all the way back before creating a new setup here where the cyan went below the red, gave it a little bit of a spark, but we're sort of in a flat zone at this particular point without any resets. So that's the long and the short of it. As always, I will continue to post significant little poignant charts like that one during the day. And it's going to be an interesting month. I think we're going to start to see that volatility that I was talking about, and probably a lot more swing moves throughout the market. It's not going to be as one-sided as it has been, because I think a lot of that built-in euphoria of the tax reform, everything else has been factored in, and now you're going to get performance on individual stocks, especially as we head towards earnings. So there you have it. As always, trade well. We'll talk again later.